You know that feeling, right? When you're just effortlessly tapping your phone to pay for groceries, maybe splitting a restaurant bill with friends. If you're in India, chances are that seamless experience is powered by UPI. It's really, really woven itself into the fabric of daily digital life. Okay, let's unpack this a bit. We've had so many fantastic questions from you, our listeners, about the digital economy and, fintech, especially with India's announcement about its own central bank digital currency, or CBDC. So for this deep dive, our mission really is to cut through the jargon, pull out the most important nuggets of knowledge. We want to help you clearly understand the key differences and, frankly, the pretty profound implications of these two major digital payment innovations, UPI and CBDC. We looked at some authoritative sources, recent speeches by RBI Deputy Governor T. Ravi Shankar, official RBI FAQs, and some insightful analyses from places like The Hindu, Easy Tax, ICICI Bank, and Bajaj Finserv. So let's get into what really sets them apart. We all probably interact with UPI daily, right? But for our deep dive today, let's just briefly underscore its fundamental nature.
UPI, Unified Payments Interface, it's India's incredibly successful real-time payment system, developed by NPCI, that's the National Payments Corporation of India, the umbrella org for retail payments here. And it's designed to make interbank transactions super fast, whether you're sending money person to person, P2P, or paying a merchant, P2M, all directly from your mobile. And it's operational, hugely popular. I mean, you can transfer even 1 rupee.
Yeah, building on that, what's really crucial to grasp is that while UPI is undeniably powerful as an interface, CBDC is, well, fundamentally different. Central bank digital currency, CBDC, is literally a digital version of a country's national currency. So think of India's euro, the digital rupee. It's issued directly by the central bank, the RBI here in India, just like the physical notes you have in your wallet. Those notes carry the RBI governor's signature, sovereign approval, their fiat currency. So unlike UPI, CBDC is the money itself. It's digital legal tender.
And here's where it gets really interesting, because that really is the core distinction, isn't it? UPI is a payment interface. It's a way to move money that already exists, usually in your bank account. But CBDC, it is the money, a digital equivalent of physical cash. Let's use a real-world analogy. Say you're buying fruit from a street vendor. If you use UPI, okay, funds move from your bank account to their bank account. That involves 2 banking systems, right? And the actual final settlement between the banks, that happens kind of in the background during non-immediate bank cycles. But with CBDC, it's like a direct cash transaction. Money literally moves from your digital wallet on your phone, say to the vendor's digital wallet. It's a one-on-one instant transaction. No commercial bank intermediation needed for that final settlement. It's central bank money.
Exactly right. CBDC transactions are final. They're settled instantly in central bank money. UPI, like you said, relies on those interbank settlement cycles where banks reconcile later. But it's vital to clarify commercial banks won't just, disappear with CBDC. They'll still have a really significant presence. In India's model, the indirect model, banks will distribute CBDC, they'll handle essential stuff like KYC, know your customer, and manage the digital wallets for users. So they act as intermediaries in that sense, but crucially, they don't control the core CBDC ledger itself. That's maintained by the RBI.
Okay, so banks still play a vital role. But what about the user experience beyond that fundamental difference? A crucial point we need to cover is connectivity. Especially in areas where the internet might be spotty or non-existent, UPI absolutely requires an internet connection or, a mobile network to make transactions work. In contrast, CBDC, well, it's being explored with this really powerful goal of working offline in the future, potentially mirroring that big advantage physical cash has in areas with limited or no connectivity. They're looking at solutions like enhanced stored value cards, kind of like those prepaid cards you might use at a mall food court, or even small specialized devices, maybe something that could attach to a feature phone SIM card, allowing offline use.
And this brings up an important question for a lot of people: interest. Holding CBDC in your digital wallet is exactly like holding physical cash in your physical wallet. So no, it does not earn interest. That's a key difference, because the money held in a bank account, which UPI moves around, can earn interest, and often does.
Right. And what about anonymity? That's such a fundamental feature of physical cash, something people really value for privacy reasons. Now, anything digital typically leaves some kind of footprint, we know that, but CBDC aims to assure anonymity, potentially through technologies like DLT distributed ledger technology, often blockchain, or maybe even through specific legal provisions. Just to clarify the DLT part quickly, transactions get recorded as data blocks in this, like irreversible transparent ledger. That ensures authenticity. However, your user identity is typically through public keys, which offers, well, pseudonymity, meaning the transaction's visible, but your personal identity isn't directly linked, a bit like cash in a way. Your actual identity would only be discoverable if, legally required. UPI, on the other hand, doesn't really offer that kind of transactional anonymity because of the inherent bank trails involved.
And thinking about denominations of use cases, CBDC is issued in specific denominations, just like physical currency, EA, euro, all the way up to E2000 to keep things familiar. It also offers this neat change feature. So if you want to pay, say, 15 rupees using a 20 rupee digital note, 5 rupees are automatically returned to your wallet. Pretty slick. And while both UPI and CBDC are great for P2P and P2M transfers, CBDC is expected to expand its reach. Think more complex financial transactions, fixed deposits, maybe investments, even commercial papers. So potentially broader utility down the line.
And security. Both systems seem built on pretty robust foundations. CBDC leverages DLT for secure, transparent transactions with a protected ledger, high degree of immutability, auditability. UPI on its side functions through the IMPS infrastructure, that's the immediate payment service, India's real-time payment settlement system, ensuring secure transactions, usually with two-factor authentication. So yeah, in terms of preventing fraud, both offer very high levels of security.
Moving to the sort of why now question, the broader context. A key driver behind this current global push for CBDCs is actually, the explosion of private cryptocurrencies like Bitcoin. The critical difference, and it's a big one, is that CBDCs have full regulatory approval from governments and central banks. They're legal tender, backed by sovereign guarantee. Private cryptocurrencies, however, they operate completely outside this oversight. And that raises pretty significant concerns about potential misuse, money laundering, the issues.
Yeah, and India presents a particularly unique situation here, doesn't it? We have this incredibly high volume of digital transactions through UPI. It's phenomenal. Yet there's also this sustained interest in using cash, especially for smaller amounts, say under 500 rupees. Now, if that preference for cash comes from let's say, discovered a technology, maybe for some senior citizens or small business owners with limited tech exposure, then maybe digital options like UPI or even CBDC won't fully bridge that gap. But as some sources point out, if the preference for cash is really more about a desire for anonymity, then CBDC, by assuring some level of that, could potentially redirect those users. And this also highlights CBDC's potential for financial inclusion, right? Providing a digital currency option for unbanked populations, especially with those potential offline wallet features that might not even need a traditional bank account.
Absolutely. And looking at it from the merchant side, UPA payments, especially for businesses, often involve these merchant discount rate fees, MDR. They can be, 2-4% of revenue sometimes, which is significant. CBDC, on the other hand, is expected to have no or very low transaction costs for businesses because it doesn't necessarily require those intermediaries like payment gateways. In fact, some sources we looked at even described current UPI MDR fees as unacceptable for businesses and expressed hope the government might step in and remove them eventually.
That's a big deal for merchants. And CBDCs could also be a massive game changer for international transactions, couldn't they? Right now, cross-border payments can be expensive and just notoriously slow. But imagine if India and, say, the US both launch CBDCs that can actually talk to each other. An Indian importer could pay an American vendor in real time, instantly, almost like handing over cash dollars. It would just eliminate those costly delays from banking settlements, even time zone differences. That could fundamentally streamline global trade.
It could. However, we do need to acknowledge the potential downsides, the inherent risks with CBDC development. These include some tricky public policy issues like potential risks to financial stability if everyone pulled money out of banks at once, though that's managed in the design. There are also the potentially high costs of actually implementing such a system nationwide. And of course, ongoing concerns around data privacy and surveillance by authorities. That's a big discussion point globally. There have even been whispers, for instance, about the theoretical possibility of currency expiration being associated with programmable CBDCs. Although it's important to say, no central bank has definitively moved that way. It's more of a theoretical risk being discussed.
Right, important caveats. Now, what about the impact on the banks themselves? There's been a lot of chatter about disintermediation risk, the idea that if users start holding digital rupees directly with the RBI, it could shrink commercial banks' deposit base and maybe their ability to lend. But the RBI, being the regulator, isn't really looking to undermine the banking industry. That wouldn't make sense. Rather, it seems they envision a new sort of complementary role for banks, distributing CBDC, handling related services like KYC, managing wallets. Banks will absolutely continue their core functions, lending, taking interest-bearing deposits, just with a new type of asset to manage alongside existing ones.
Yeah, and if we connect this to the bigger picture, this is where it gets really transformative, I think. CBDC's programmability feature. This isn't just about making things faster or cheaper, it's potentially a profound shift in how funds can be directed and tracked. It allows the government, or maybe even a user down the line, to ensure funds are used for a specific designated purpose. For example, imagine a digital rupee issued for, say, a fertilizer subsidy. It could literally be programmed to only be spendable at a registered fertilizer shop. Think about the transparency that brings. It could significantly reduce leakage in government schemes. The implications for targeted aid are huge. Or even for combating illicit financial flows at a systemic level. It's a level of precision in monetary policy and fiscal distribution that was previously, well, unimaginable. It could allow for conditional payments too, like automatic payments when certain contract conditions are met via smart contracts, giving the government and the RBI much more precise control, better tracking of money flows, potentially reducing corruption. It's quite something.
Wow, that is potentially revolutionary. It's also worth a quick mention, I think, that there's a wholesale CBDC, too. The E or W designed more for financial institutions, right? Its purpose is more about streamlining interbank settlements, large value transactions, making them more efficient, reducing settlement risks, often using things like smart contracts for automated execution. Pilot uses for this already include transactions for government securities, interbank lending, that kind of thing.
Exactly. And just to reiterate the legal status, it's very clear. Under the RBI Act, this digital currency, the e-euro, is considered legal tender, just like paper currency. And to keep things consistent, the same income tax rules, like needing a PAN card for large cash transactions, will also apply to CBDC.
Okay, so to kind of bring it all together, CBDC and UPI are definitely not replacements for each other, are they? They serve quite distinct purposes, and they're really expected to coexist, complement each other within India's, let's face it, rapidly evolving digital payments ecosystem. In fact, the incredible success of UPI is actually seen as a really positive sign. It's kind of laid the groundwork, shown the possibilities for CBDC's eventual widespread implementation. What a journey through the digital rupee and UPI. We've really unpacked how UPI is this powerhouse for moving existing money around super efficiently. While CBDC is fundamentally different, it's a whole new form of digital cash itself, with unique features from potential offline capability to that really mind-bending programmability. The potential for a more efficient, maybe more transparent, and possibly more inclusive financial future is genuinely exciting.
It really is. So what does this all mean for you, the listener, as these systems evolve side by side? It's worth considering what situations might make you prefer one over the other. Do you prioritize that instant final settlement for certain big transactions? Or maybe the potential for enhanced anonymity that CBDC aims to offer is more important to you in some contexts. Or perhaps earning interest on your savings remains paramount, making traditional bank deposits moved by UPI the clear choice for storing value. Each choice will likely reflect your specific needs and priorities as this digital financial landscape keeps growing.
Indeed. The canvas for digital innovation here is just wide open. As these developments continue, it'll be absolutely fascinating to watch how these technologies maybe further intertwine, how they evolve to meet all these diverse needs, especially for a rapidly digitizing economy like India's. Definitely keep a close eye on this space. And hey, if CBDC pilots become available in your region, perhaps even explore participating yourself. It's the future unfolding right now.